Hey, it's Rob Vanovermeire, and welcome to April. Spring is here, and so are the new stats for real estate. I'm sure you've all been anxiously awaiting this video because I look forward to doing it every month, and I'm sure you look forward to watching them because everybody likes to know what the real estate market is doing. And you'll notice on my screen, I have an interesting chart that I don't often show, but I thought it was interesting and applicable. And by the way, I'm going to ask all of you for permission for this video to go a little longer than normal because there's a lot going on. And the first quarter of 2022 is in our rear view mirror. So I have lots to talk about. So be patient. This video is going to go a little longer, but I think you'll get a lot out of it. This chart, as you can see in red, is showing our benchmark price change. So you can see just where we came from way back when we're talking percentage increase, not by actual price. And you can see that we have had a bumpy road and up and down, and all of a sudden back again. Here we are in 2022, and we are on the rise. And you can see our benchmark price is going up 20% for the Calgary market. The months of supply is in blue. And isn't it interesting how quickly things can change? In 2020, you can see that unbelievable. We had at one point in 2020, 10-month supply of inventory. And now we are around 1 month supply, which really goes all the way back to late 2006, 2007, when the market was exactly where we were now. And of course, by 2008, things changed dramatically, and we started having large amounts of supply of inventory. And I know I keep getting this question all the time. Rob, is this market going to stay this hot? What's going to happen? Are we going to see a correction? And I show this chart every now and then to people just to show them what has happened in the past, because, hey, my guess is as good as yours is when it comes to the future. We don't have the crystal ball. But you can see if you go back even 50 years, traditionally, there's a correction at some point, after a market has really gone up. And from a selling perspective, that might motivate you to sell. From a buying perspective, you might say, oh, well, should I wait and see if there's a correction? Well, the truth is we don't know when the correction could come. We don't know how much of a degree of a correction there is. And even if there is one and you buy at the wrong time, if you hang on to the real estate long enough, it always comes back. And I know I bought a property in 2007 at the wrong time, and it had dropped in value in 2008. And I still own it to this day, and I'm doing just fine. I've got a good return on my investment. So you do have to be looking at keeping real estate. It is a longer term investment if you're a buyer. But if you are thinking of selling, it's something to really consider that this is, the iron is hot. You might want to strike now because we've seen this play out before. You go to 2014, we had right here in 2014, late 2013, we had really hot, only like 1 or 2 months supply of inventory. And by 2015, all of a sudden we were at 6, 7, 8 months, and prices had softened and corrected. So this is a pattern that typically happens in Calgary. So let's take a look at prices here. And I'm showing you the benchmark price of real estate. And this does factor in condos, townhouses, and houses. And that's why you'll see the benchmark price might seem a little low. But if we were looking at detached houses only, these numbers would be much higher. But I wanted you to see just, the change of pricing depending on where you are in the city. So you can see the north has gone up 22.2%. The Northwest at 580,000 has gone up 18.2%. This is year over year, by the way. Northeast, 426,700. They're up 22.4%. Interestingly enough, City Center only up 6.9%. But you got to remember, there's a lot of apartment condos in the city center. So that is dramatically different than if we were looking at detached houses. The West, 15.5% at 623,600. Down in the south, we've got 499 and 19% in the southeast at 540 at 23.3%. So clearly there's growth. Oh, let's not forget the east, by the way, 350,000, and they've gone up 13.1%. It gives you an idea of just where the demand is, and also keeping in mind just how many condos affect those prices. But it is interesting to see that the properties that are far away from downtown seem to be doing quite well, and there seems to be a higher demand. And that does seem to be related to the amount of people still working from home. Okay, let's get into the some of the other stats that we normally look at every month. And you can see my team of agents, all attractive people that are working with me and doing a great job. This is a detached home chart. And You can see this is really the same situation as last month. The absorption rate at 104%. It just means that by the end of the month we had sold more houses than there was available on the market. So this is now the fourth month in a row that we've just seen almost every detached house that goes on the market sells. I say almost because even though this says 104% listing absorption rate, it does not mean that every single house sold. There has been some houses that haven't sold, and quite frankly, what I've noticed is there's some people that are getting a little greedy. To no surprise there, I've seen this before, and asking some ridiculous prices on their house, and they're not getting it. Even in a hot market like this, there's a limit to what someone is willing to pay. But our benchmark price for detached is now at $620,500, and that is up from a year ago at $515,100. So what a dramatic increase in pricing for benchmark prices. And you can see if we go all the way back to 2013, we were at 465. Now we're at 620. It's quite remarkable how much of an increase we've made. And that's what happens when you just have such low inventory levels. Here are the hard numbers. We sold 2,280 properties, and there were 2,191 on the market at the end of the month. That's why the absorption rate looks higher. Just an incredible amount of demand of people that want to own detached houses. On average, it took 14 days to sell a property in Calgary for a detached home last month, which is remarkable. But I can tell you a lot of properties, especially when you get into the lower price range, they're selling even quicker than that. Here is the market distribution. This is my favorite chart, and you can see, boy, under 400,000 is now like less than 5.8% of the market. And in 2020, this was like 20% of the market. So the prices have moved into under 500 is now 17.87%. And that's, I can tell you, is even getting tough to find anything under 500,000 that's good. It's not easy. So to my surprise, who could have ever guessed that this would happen? The number one spot, the sweet spot of pricing in Calgary, is now 500,000 to 600,000. And I can tell you, in this market right now, if you are selling a home between 5 and 6, there's a really good chance it's selling with more than one offer. That's where the most of the buyers are. But even look, that 6 to 7 is almost at the same percentage as 5 to 6. And that really is something else. So our market is moving up rapidly. And 13% goes to 7 and 8, and then 7.21%, 8 to 9. And even this luxury market has now surpassed 5%, which is the first time I've seen it over 5% since 2007. So there is definitely a high demand more than ever of people buying $1 million to $1.5 million properties. So it goes back to what I said when I started this video. This is a very, very good time to sell. The good news is there's still some good value in Calgary if you're buying. We're not as expensive as Ottawa, Toronto, Vancouver, Halifax. They're all still more expensive than Calgary. So we're still an affordable market to this day. Okay, let's look at the semi-detached market. Wow, the absorption rate dropped a little lower, 92.78%. So it actually dropped a little bit from February, but still, that's a really strong market. 478,400 is our benchmark price, and we're up 16.34% in pricing year to date. If you go back to March of last year, we were at 411,200, and now 478,400. As I always say, this is people's second choices when it comes to buying real estate because these semi-detached properties don't have condo fees. And let's look at the hard numbers. We sold 347 out of 374. At least that's how many active there were at the end of the month. And 20 days on average to sell one of these. So that's really strong. And if you look at market distribution, you can see that still the number one spot is under 400,000. And as I always say, that's because if you want to get into your first home and you don't want condo fees, it's really attractive if you could buy something under 4. Of course, 4 to 5 is a strong market. Even 5 to 6, to my surprise, is a strong market. So everything is moving up. The boats are being lifted by the tide coming in, but we still have, you can see, the majority of people still would like to buy in the lower priced area of semi-detached. That being said, look at the 700 up to 900, and this is our infill market, and that is actually looking pretty good. 10% under 800, 9% under 900, even getting into $1 million or $1 million to $1.5 million. This is all showing demand, and that's great, because that infill market was not doing well a couple of years ago, and there's definitely a renewed interest to get into those. And it also goes to show that people really don't mind buying semi-detached homes. There's really no stigma to that, as there once was many, many years ago. Now it's perfectly okay. In fact, there's an advantage in the infill market because you do get more square footage. Okay, let's look at row houses. Row houses, wow. There we go. 111.83% absorption rate at the end of the month. So we're having a repeat of last month. Wow, what a renewed interest in these type of properties, which a few years ago, they weren't really that popular. It's amazing how things change. Our benchmark price is $335,400. So look at the difference from a year ago, $287,900, and here we are at $335,000. Not like the dramatic difference you saw in the detached home section, but it's really good to see that these townhouses are finally seeing a demand. And you can see it's been a bit of a rocky road. I mean, from 2015, I mean, they had falling prices all the way till 2020. And to see us, almost back to where we were in 2015 at 323, that's just a good sign. There's no question in my mind, we're going to see the benchmark price either meet or exceed 2015 here, probably by next month. I think that's probably going to happen. Let's look at the harder numbers. So 709, sorry, this is just a little blurry. There we go. So 709 sold. There were 634 active on the market at the end of the month. So just a real high demand. I mean, that's just almost everything is selling, and it's selling obviously in just 19 days. And where is the majority of the sales? Well, no surprise, under $400,000. And I can tell you this product is very, very popular with people that are going through a divorce, popular with people just starting out, maybe having a young family, because townhouses or row houses usually have a small backyard. It feels a lot like being in a house in many cases. So, and you can get into them for under $400,000, which is obviously why 40% of the market is there. But there's still some under $300,000. And you can see even this market has definitely increased 17% under $500,000, and then it just drops off from there. Last but not least, apartment condos. And it's so good to see this too, 66.18%. A year ago, we were at 22.84% demand in these properties. I mean, so literally almost 80% that were listed a year ago weren't selling, and now we're seeing that only 34% of the properties listed aren't selling for apartment condos. So what a dramatic increase, just a turn of events. We haven't seen massive increase in pricing. It was a year ago, 250,000 was the benchmark price. Today we're at 265, so it's not like they've massively gone up. And as I always say, there is a lot of apartment condos to choose from, so there's still a lot of choice. So if the supply is still reasonably strong, you're not going to see the massive increase because you just have short supply, and you don't see too many bidding wars when it comes to apartment condos. I sold one last week, and it was 2 days on the market, and I was able to negotiate $10,000 off the asking price, which is not happening too much in the detached market if it's in the $500,000 to $600,000 price range. So look at the hard numbers here. 771 out of 1,165 sold. Very positive, respectable 38 days on the market. You can see the market distribution. Most of these condos are under 300,000. There's a lot of people that they want to get into the market. They're buying their first property, or you've got a lot of people downsizing. And the people downsizing, they like to get into these $300,000 properties too, because they like to hang on to their money or reinvest it in something else. And that's why that's where the demand is. To my surprise, there's still some good value under $200,000. And even this market under 400 has increased. But once you go past, 400,000, it goes off a cliff. I know I'm selling a luxury condo right now that's over $1 million. And we're not getting a lot of interest, but there's just not very many people buying in that price range. We've only had 4 that have sold in Calgary under 1.5. So I'll just wrap this video up by saying, here's my advice if you're looking at selling. It's definitely a very good time to sell. I don't think that any of us could ever really time the market. I know a couple of people have said to me, maybe I should hang on a few more months or wait till fall. Maybe the prices will go up more. Of course, it's just really hard to predict that. Usually when we have these high demand, low supply markets, you'll start getting more sellers putting their place on the market because they've made some money, and it usually increases the supply. And I'm fully predicting that at some point here, things will level off. I don't think that this demand can continue. And so I think that, by summertime or maybe late summer, I wouldn't be surprised at all if it just levels off because more supply hits the market. So as a seller, you might want to take advantage of the market now. If you're a buyer, that's a good argument to wait. Yes, of course, the downside to waiting is that even though it might level off by summer, it doesn't mean that the prices are going to get better. So you could still get a property today, and that will be lower priced than, say, late fall. And the other thing to consider is interest rates are also rising, and I wouldn't be surprised if we see another interest rate go up again in the next quarter. So as a buyer, you could also be paying a higher amount in interest rates as well, and that should probably weigh in on your decision to maybe take action right now. So if you do want some advice on what's going on in the market, and if you're a seller, believe me, when it comes to these multiple offers, I know I mention this all the time, but you need someone who knows how to guide and direct you on these multiple offers. There's so many different strategies to take. I sold a property last weekend with 8 offers, and I can tell you that I was able to negotiate a much higher price than my clients were expecting. The offers that came in, they were quite willing to take the highest that came in, and I was the one that suggested a strategy that we could actually get a little more money than just taking what was on the table. And they took my advice, and I made them another $20,000 more. And that's the sort of thing you can do in this market if you know what you're doing. I do work with buyers as well, and we see some agents that seem like a deer in headlights when it comes to navigating this multiple offer situation and doing it correctly. There is a way of creating a very good auction and getting the maximum sale price out of your property if you are selling. And if you're buying, equally, there's some strategies on getting your offer accepted without having to stress yourself out over a bidding war. And there's ways of dealing with that as well. And I've got some great strategies to share with you. So don't be afraid to reach out to me. I don't get attached to whether you do anything or not, but I think the advice I can give you can at least get you thinking and might be able to help you as to make a decision. So hope that was helpful. Hope the video wasn't too long, and I will see you all next month.